Welcome to Get Serious. Wanted to provide a key update on the Louisiana minor subdivide deal that we've been working on. Been touching on this one in various capacities over the past several months here, but very brief update for a recap. And if anybody new is listening to this deal here, so this is like a roughly 32-acre property, central Louisiana, that we chopped up into 3 parcels, roughly equal size, and did pretty significant value add on it. Fully installed driveways and cleared out home sites for all 3 of them, and they were positioned a bit differently, so they are unique products. And so it's like a fully turnkey setup for residential home buyers, as utilities are at the road as well. So I was really excited about this project, working with the best and most knowledgeable brokerage group in the area. Everybody who's visited the property has just said, yeah, the value add is just tremendous. It's some of the highest aesthetic appeal of vacant land within the area. So definitely premium products. And we had listed one of them a bit over a month ago, and almost about 6 weeks ago. And then we listed the other 2 once the final value add was done, roughly 3 weeks ago. And there really haven't been substantial hits yet. So I just wanted to provide a kind of overview of where we're at the moment. Not alarmed at this at all. Again, higher price point. We're really following the broker's suggestion here. He's diligent. So I just want to point that out right away here. But, nevertheless, like every land investor, any real estate investor would just love, you're just getting, as soon as you list something, just instantaneous offers, full cash, just close quickly. Great. But, that's not always going to happen here, and didn't have unrealistic expectations in this case. And so we weren't, getting some calls or hits early on, site visits even. And so I was just, a bit curious, okay, what's necessarily going on? And, chatting with the broker, I check in once, twice a week, generally twice a week at least, on this property. Is very responsive. And, his, kind of breakdown is that it's not just our properties. It's just like he said, literally as soon as July or the month turned to July, it's like their local market just collapsed, and they weren't, they weren't getting like any calls for any listings, not just their brokerage, like anybody locally. They said, July, it's not always the busiest month, but usually they're getting pretty decent movement. Plus they got, solid sales through much of May and June. Not as high necessarily as other years. Like it's slower market in general, anywhere that's outside of the Midwest and the Northeast. Like that's just, typical at the moment, just the new reality we're working within. But he was like, yeah, this just, they were just kind of stunned. And so they're just, scrambling, okay, figuring out, all right, what are some of the reasons behind this? And so we can kind of go over them, as well as our game plan going forward here. And I really wanted to drill in, okay, if the market is kind of collapsed, like when has the last time has this happened from, any recent memory in the past few years, anything like that, just so we can kind of level set when things might come back around again. Real estate is cyclical, right? So it's just, what do we have to work through here? And he's like, yeah, honestly, we haven't seen, like a collapse in activity like this in 4 years, at least for this particular market. So it's definitely an outlier recently. And as far as trying to start putting some data points together, he's like, well, first, it's really hot out, excessively so. I mean, it's Louisiana, right? So middle of summer, it's not too unexpected yet. Nevertheless, you can have even more intense heat waves, even, more so than locals are comfortable dealing with. I'm here in Central Texas, even though like this summer and last summer have been kind of middle of the road when it comes to summers. Like, that really hasn't passed 100 degrees, fortunately, here, but like it's still super hot. Like no one is really going out, or I'm not going out like middle of the day. You pretty much, stay inside other than, mornings and evenings. So that's not too unusual for the southern states. And we did have another property in Arkansas last year that was in a similar situation where, there were a number that's another case study to look at, but there were some weeks that the temperature was just super hot and it really slowed down activity. And we did have a good exit on that eventually, but that did seem to be an impact. Plus, in this area of Louisiana, again, you really can't control what your buyer pool might be thinking, but the broker was just conveying, hey, like a lot of these buyers kind of talking about, or at least some of the local chatter. I'm not sure where exactly it's being picked up, but broker has his ears to the ground. There's no doubt about that. Hearing from the federal perspective, Trump saying that putting pressure on Powell and going to collapse federal interest rates down to 1%, so that gets people excited. Oh, like maybe I can just have better financing, and my purchasing power is just going to increase, so we'll just wait for that. And we can't necessarily predict precisely if or when that might happen, but and that's the thing, we can't control what our buyer pool might actually think. But in terms of, is that precisely how that would go down when it comes to borrowing rates for real estate? Like, that's really not the case, because mortgages tend to follow the 10-year treasury market much more. Like the federal interest rate is really tied to short-term performance. And it really only relates to bank-to-bank lending. Like, that doesn't actually touch the consumer side. So that's why, mortgages, even though most mortgages tend to be for 30 years, most people aren't staying in their house necessarily for 30 years. That's why it tends to follow the 10-year bond market much more so than that. And we saw an example where, we had like 100 basis point cut over a little over the past year, and mortgage rates actually went up. So that wasn't necessarily correlated to what the federal interest rate was. And if, federal interest rates are cut to 1% here, it's a very high likelihood that that would be perceived by mortgagors and potentially bond market buyers that the economy is in rougher shape. Then and there's more inherent long-term risk that mortgage rates may actually go up. Plus, land just tends to be more stable when it comes to financing rates as well anyway. Like, even when financing rates were super low, and people were buying the sub 3% mortgages for homes in 2020, 2021, land still tended to be closer to like 8-ish% anyway. So it's a little unrealistic for folks to think that their purchasing power is going to increase even if the federal rate changes. But again, we're not out there, changing people's mind, talking to these buyers. Like, you kind of have to meet your buyers where they're at. So if they have a hypothesis and they perceive things to be that way based on whatever news they're consuming, then that, like, we just have to work with that, right? But that was another thing that came up here. My perception too is just, again, just the general real estate slowdown that's happened through much of the South. Like, it's possible, hey, like the timing, we're just getting, true bottom up information, like being in the market here where, again, prices have just been high in general. There's uncertainty within the market. People are seeing other reports, and no surprise here too. Like, okay, the rise of AI, people are worried about their job security as well, and still how tariffs might impact pricing for any of their consumer level products and so forth. So all of that can still be playing into potential fears of buying into additional real estate. And like, I was even seeing a report today, Redfin was showing this spring selling season specifically for houses was the slowest in 13 years in terms of actual properties going under contract. And like this is worth another podcast, but it's just a huge decline over the past 3 years. Well, 2023, 2024 were all slow too, but 2025 even it follows that downward trend here. We just have less activity within the market, so we have to account for that as well. And okay, so those are all noted as potential avenues here, but then, okay, what more can we kind of glean and information that we can gather here? Obviously our brokers, like, they're super incentivized to figure this out, right? Their livelihood depends on an active real estate market. So they're just heads down, okay, what can we do? So, our broker reached out to a local appraiser who usually tends to be even further up the chain as far as um, where activity is, because lenders will hire her prior to closings happening, so she'll usually get kind of first information, based on how busy her business is for assessing potential sales that are going to happen. That can kind of indicate where activity is within the real estate market. It's a pretty savvy little data point there. So he reached out to her and was like, yeah, no, it's definitely slower at the moment here. We'll see when it potentially picks back up again. And we also tried just reaching out to developers, both to see if we could sell some of these lots, if any of them, to developers themselves. Haven't got calls back yet because a lot of them are busy. Plus, they know we're trying to sell product to them, but also can kind of inquire, okay, how is your business looking? Insofar as your final activity on the dispo side, getting getting even more of an idea of what the buyer pool might look like from like a final end product perspective as well. So we're still trying to figure out that. Plus our broker's trying to reach out to other brokers who are in other parts of Louisiana, or might have kind of a wider circle that they operate in, so you can kind of get a sense, is this like more hyper local, or is it affecting most of the state overall? I mean, we know like it's impacting like a lot. Like we see the hard data, we see the soft data. Like, yeah, it's just in general a bit tougher. So we're just trying to really assess, okay, where are we at here? And it's not necessarily a pricing thing too. This is the key thing, is that, okay, if you're in a market where it's just kind of at a standstill here, it doesn't make sense to cut price into a vacuum, right? Because you're not really serving yourself. You're just like, shooting yourself in the foot, because you're not going to get the price you want, and the buyers aren't necessarily looking at the moment either. Plus, we know a lot of folks are on vacation in July, before school starts coming back around in the next couple weeks or so. It's not necessarily around as much either, especially for kind of residential lots that would probably be more oriented to families as well. So that's just something else that we have to keep in mind. By taking all of these data points together, and we have all of our online activity as well here, and it's still pretty solid. We have both the land.com. There's still a bit of a web glitch with list tracks kind of collecting the MLS data besides one of the lots, but one of the lots that we had tested the market and then we did an initial price cut on, that had a bigger bump in activity like the 3 days after we had cut the price. Then it kind of stabilized a bit. So we know, it got some activity, but not necessarily driving, real site visits or calls there. But very fortunately, because, to me, it's always like, okay, the hard data, who's actually calling and potentially visiting these lots. And so we do have a site visit with a client coming up this week. Actually, I'm pre-recording this a little bit, so we'll probably have to report on that after, what the result of that is. But to me, okay, even now in this pause within that local real estate market, we're still getting at least a site visit there. And again, the number one thing we have to kind of keep in mind here is that, as the broker keeps saying, and anybody who's viewed these lots, like, hey, this is the best product in the area. So if there's going to be any activity that comes up, yeah, we might have to be more patient for it. Like, these are the best lots. Like, this is the cream of the crop. So that's always where you want to be positioned in, more down cycles or just softer markets in general, because, you want to have the most appealing product for any of those potential buyers that might come around. Plus, the potential room to negotiate accordingly there. And, we have investors involved in this deal. They signed on for the long run here. Plus, we have like no carrying costs on this deal. Probably be below a few $100 a year to pay off property taxes for this deal here. So there's not a tremendous amount of burn when it comes to it, besides the preference that we have to pay to in investors. That can impact returns if it takes a while to sell. But it's like, hey, we're going to be patient through more of a blip in the market, even if it lasts a few months, even a quarter, maybe even 2 quarters. I know paying attention to some home builders when they think things might start to pick up again, and work through some existing inventory as well here. We can kind of keep that in mind, but our broker is like, yeah, looking at all this info, people I've talked to, like, yeah, we're still positioned well here. Not concerned that you guys won't be able to get a solid exit. It's just it's not going to happen at the drop of the dime here. So I just wanted to give you all an update on how things are going with that particular project, and the information we're collecting, what our decision making might look like here. Again, you're just trying to collect from every avenue possible, right? And get in front of the right eyeballs and not just rush to judgment. So hopefully this is helpful for other projects you guys might be working on as well here. Excited to deliver more to you all shortly. And hopefully we're going to be under contract with at least one of them not too long from now, but we'll sit tight until the meantime. So with that in mind, SeriousLand.capital for any of your funding needs. 50K minimum purchase price, 150K plus preferred, and then zero cost review of your land deals at Land Daily Diligence Facebook group, and then landpricer.ai for the most reliable land pricing tool on the market. Subscribe and share, everybody. Looking forward to talking to you next time. Take care. Bye.